that. So that is ICICI Lombard for you. Deepak Shenoy is with us, founder at Capitalmind, is joining us now to take some questions. Deepak, good to have you here. Thanks very much for your time. We're going to start with ICICI Lombard, which is seeing perhaps, one of the largest moves of its listed life with a 10% surge. We had, by the way, Saurabh Mukherjee of Marcellus with us earlier, who's owned the stock in his portfolio for a while, and he thinks, it's a solid business, no doubt, and things are coming together for the company as a business as well. What's your sense here?
So, as a disclosure, we own ICICI Bank. So, in a complex way, probably a little happy because it's a downstream positive for ICICI that the stock price goes up. But also the core business of ICICI Lombard, I think, terribly underpenetrated in India. There's a lot of growth factors here in their favor. However, because it's general insurance, the instances of let us say, from at one level fraud to another level, under insurance by a lot of players that should otherwise be taking it, that tends to kind of skew the industry's economics against it, especially in bad times. But recently we've seen an increase in premiums, especially on health with respect to COVID. We've seen more of, as auto sales grow, there will be some growth there in that channel as well. I haven't analyzed ICICI Lombard's business per se, but in general, the general insurance sector should do well over the next few years. For something that's more fledgling as an insurer like ICICI Lombard, I think you'll have to wait for 5 to 10 years to see the real economics play out. But they're one of the strongest in the territory. So I think, good things. But this development, I think, is more positive for ICICI Bank, to be honest, because this stake sale would have created a massive rub-off on the stock price on the remaining 30% that was to remain with ICICI as well.
Deepak, hi, afternoon. Rima here. Wanted to get your thoughts on two mid-cap IT companies. One of them is Nucleus Software. And what an up move the stock has had post its numbers. Numbers came out on Friday. The stock went up 20%. It's followed it up with another 20% up move. It's a fresh 52-week high, and the stock is up 150% since the beginning of the year. Now, the conference call is scheduled at 3 p.m. today, so that's when we'll get greater clarity. But the Q4 numbers look very strong. 22% quarter-on-quarter, 35% on a year-on-year basis. Margin expansion has been solid. 40% margin expansion. Just look at the previous margins for the company. They used to be 16%, 12%. In Q3, it picked up to 28%, but now they've hit 40%. And for the full year as well, the company has clocked in a good revenue growth of 25%, with 27%, with EBITDA margins of 25%. eClerx is the other one. Now here, all the excitement is centered around the new CEO and MD announcement, Mr. Kapil Jain. Now, up until now, eClerx's top management were the promoters, the founders. But now for the first time, they're going to have a professional CEO, Mr. Kapil Jain, who came in from Infosys. He was actually hired in the month of April, but that time the understanding was that he will be the UK subsidiary CEO. But now when they announced their numbers on Friday, they indicated that Mr. Kapil Jain will be the group CEO. So there is clarity on the management. The number 2 point about eClerx is the valuations are not expensive versus the rest of the pack. It's trading at 12-13 times forward multiple. That said, the Q4 numbers of the FY24 guidance is quite subdued. The company was uncertain about hitting double-digit growth. In fact, they even hinted that Q1 revenues could see a negative growth, a decline in revenues in Q1. So they are facing a lot of business disruption. And that's what the street is worried about. But all hopes are pinned on the new CEO MD announcement, Mr. Kapil Jain, for eClerx. Deepak, any thoughts on Nucleus or eClerx?
So we don't cover either, Rima, but here's my, the Nucleus numbers were quite interesting. They actually have had a very bad year in FY22 with only 7% margins or so. I think now that's come back to the more respectable 25%. In fact, 25% is extremely good for the IT services business. So I think they're getting re-rated from a PE perspective. And also perhaps from some kind of estimates of growth. I'd be a little wary of that because 2 years ago, they made, from 2 years ago, the total earnings growth is only about 15% or 16% absolute. So that's not too much to rejoice. Though the last year numbers, since they were lower, it's the base effect that's caused, I think, a re-rating of Nucleus. But having said that, the stock also hasn't done anything for, I think, nearly quite a bit. So it's kind of getting re-rated upwards now because of growth expectations. As you said, once the conference call is done, we'll have a better view. eClerx, I don't have a view. I know it's a very interesting company. It's probably a better play on the price of the stock using technical parameters than, for me at least, because I haven't looked more deeply at the fundamentals at this point.
But do you think broadly the segment eClerx operates in could be the hardest hit by, say, generative AI and the chat GPTs of the like?
Rima, I think my view is that if we look at the concept of AI, we think of it as it'll take away jobs. But almost every time that we've had technology that is supposed to take away jobs, it increases the jobs. When we thought people would digitize, we would think that the usage of paper would reduce. It has actually increased over the years, not reduced. We thought that jobs would go away because of technology. Typewriting jobs would go away. PCO jobs would go away because of cell phones. All of that stuff has just not happened. There's been more jobs in perhaps related areas, not exactly the same area. But I think what will happen in the end is eClerx will develop enough internalized skills as well to be able to harness AI to go to their customers and says, we'll do it for you using AI, and perhaps even increase their margin profile using it. So it may not necessarily spell doom for the companies involved. Employees will need to reskill, but I think AI will only create more opportunities, not less. So regardless, I mean, there may be a short-term impact, but I think any company will gear up to it. Every company is talking AI now. I'm sure they're also on top of some of these things ahead of what we are thinking from the outside.
All right, Deepak, stay with us. We'll take a very quick commercial break. We'll be back. We'll also have Trideep Bhattacharya, Chief Investment Officer at Edelweiss Asset Management Company, on the other side for some more conversation. Stay with us.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
ट्रेडिंग shouldn't feel like this. इसलिए हमने बनाया ICICI Direct Flash Trade, जो देता है clutter free experience, quick entry और exits, live tracking के साथ, सिर्फ ₹7 per order. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Okay, welcome back for the markets. We're almost at 18,600, but just shy of that. We're up close to about 0.5% on the benchmark indices. Deepak Shenoy is still with us on the show now. Deepak, any other stock which you have a lot of conviction at these levels? Because people are worried about investing at levels of 18,500. They've got the memory of the last 2 years when, markets have done very well. So at current levels, any one or two stocks where you have a lot of conviction that you would recommend to our viewers?
So, we can't recommend stocks. So you'll have to treat this as more like I own them, so I'm talking about them kind of thing. But Rima, we've had a big position in LIC for the last year or so. We've been building it up over time. And I know it's not very popular to say this, but this is a company that just turned out a 36,000 crore profit. It's going to be among the top 5 or 6 most profitable companies in India. It's in a market cap of 380,000 crores. So my conviction in that seems to be, it seems to have played out. When it came out, it had only about a 5 or 6,000 crore profit last year. We were surprised by that, but we were like, okay, once they get the accounting proper, they will be able to report the higher numbers, and they have. I think while the insurance market itself the life insurance market is currently going through a flux because of the tax changes. I think this is one of the largest players, one of the most aggressive players in town. They are a PSU, so you'll have to give them a little bit of a discount. But currently they're trading at 60% or so of their embedded value. They're trading at 10 times earnings. And because it's so mature, you can look at those earnings from a mature insurance perspective rather than just as a multiple of value of new business. Because you have such a tremendous amount of repeat business also that's coming into LIC. My confidence over there is that as India grows in terms of financial penetration, you're going to find that insurance, which by the way, LIC manages more assets than all of the mutual fund industry combined. So from that perspective, they're a relatively large force in the financial intermediation space. So I think as India's financial penetration grows, more financial assets will come, more insurance assets will come as well. So just my little vote of confidence there. I know it's probably too small to make a difference, but again, risks are, of course, the government will have to divest another 20% over the next few years. People don't like PSUs, and of course, there could be governance changes or issues which hurt shareholders. But just my.
Okay, good to hear, Deepak. We like to hear about some unpopular names. After a while, I've heard this one, LIC. But let's see how that goes, and all the best with that investment. But let's focus on a couple of other names then. BHEL, that stock is getting in trade even as brokerages have a mixed view on the outlook. Vivek is with us to tell us why.